interest rates. So interest rates are changing. How many times a day do they change?
Well, literally, they do change almost on an hourly basis. It is a fluid figure, much like some people I see on your phone right now. Some people have the app open where it constantly shows where the Dow Jones and the S&P is on a given day. It goes up and down. Same thing with mortgage rates, but that's getting a little bit too complicated. Generally, within periods of weeks, if not months, they trade within a very small range. The 30-year fix today, as we're recording this, is just fractionally under 3%, which is, I mean, very few times in my professional life, if in history at all, that has a 30-year been that low. Fractionally right around 3%. Going back over the last 90 days, about the highest it's been is 3.5%. Okay. About the lowest it's been is about just a little bit more than 2.5%. So yes, there is a range within there, but it's not as big of a range as people think.
Right. So I'm not going to say, oh my gosh, if I don't lock a 3% today, it's going to be 8% tomorrow.
Exactly.
Something to the economy would have to happen to affect everybody.
Yes, we would have much more worry on our mind if interest rates went that high.
Right.
It means it's probably Armageddon, ladies and gentlemen.
Oh, well, here's what gets me. So people are online and they're scrolling through their favorite search engine, Zillow, looking, saving houses, and they see 1.99% interest rate. They go, oh my gosh, that's the lowest rate I've ever seen. I've got to call that bank, which is some national bank or something like that. That's just a huge warehouse lender. But they don't realize that you're not locking a rate when you call. When do you lock a rate?
For most lenders and brokers, you cannot lock until a purchase agreement has been signed. We can't lock a hypothetical, and a lot of people who tell you otherwise, they're probably not being completely honest with you. Generally, you cannot lock until the purchase agreement has been signed, but rate locks for the most part are free of charge. I mean, we can lock a rate for 60 days at no cost to you.
Right. So I see a house, I want to get it, I need a contract on that, I get that contract, and I called Tom a couple months ago and his rate was 3.5, but I'm seeing online now it's 3.25. Well, there's a good chance that Tom's rate is 3.25. It's just changed in that time. So I don't need to panic. When I called you, the rate was one thing, but maybe 60 days later. So that's an interest rate. How is that different than a mortgage rate?
Well, a mortgage rate and an interest rate, or you say a mortgage rate and an APR. What do you?
Tell us the difference between those three things right there.
Well, interest rates, generally an interest rate is set by some type of index. The Federal Reserve sets the overnight rates of funds. There's interest rates that are set by powers and forces much greater than you, okay? Mortgage rates are set basically by the market. Mortgage rates vary from lender to lender. They vary from broker to broker, but there's not a huge swing. I would advise anyone I understand rates are part of the mortgage business, but it is a true statement that most of my competitors are within 1/4 percentage point of my given mortgage rate. It's not a huge swing. The last time I bought a new car, I could not believe, I grew up in the age where my dad told me to go to 3 different dealerships, get a price. It's all the same.
Right.
I went with the dealership I felt the most comfortable with, who seemed the most professional, okay? So interest rate, mortgage rate, APR is a true disclosure of your total cost of financing. And APR is almost always higher than the interest rate because it's indicative of this mortgage had cost included in it. You are borrowing, you are paying interest on a sum total of fees that, and this gets real complicated. The best thing to do is Google APR, but the APR is almost always going to be higher than your interest rate. If that spread is minimal, that's pretty good indication of a good deal. So if your interest rate that you lock is 2 3/4 and the APR is 2.875, that's a pretty square deal. But if the APR is 3.5, your interest rate's 2 3/4, that means there's a lot of fees on there that you really should be questioning.
Right, and that's the thing that I think people don't understand is they may have a lower interest rate, but then somewhere along the line they're paying fees that really wipe out that interest rate. Tell me about, can I buy an interest rate down through something called points?
Yeah, points are still there. On the inside, we call them a little bit different than what the consumers call them, but consumers still typically call them points. Can I buy down the interest rate? Well, sure you can. And then sometimes it makes sense. But I will tell you this, basic math and a professional opinion will help steer you into what's best for you, okay?
Right.
So if I know beyond a shadow of a doubt that the home that you're helping me find is a home that myself and my family are going to be in for 10 or 15 years, and by spending an extra $2,000 at closing, it's going to get me an interest rate that saves me $20,000 over 10 years, that's a no-brainer.
Right.
But sometimes people get so obsessed, it's kind of funny, we talk about it behind the scenes sometimes, is a customer will come in, they're trained to shop by interest rate. I'm getting a mortgage, I need to ask what the interest rate is. And they'll come in and say, I will not take an interest rate 1 cent above 2.5%, and I don't care if I've got to pay $5,000 to get 2.5. You know, that's the mentality that they're coming in because that rate is so important to. But there's a lot of cases where going with a slightly higher interest rate would get rebate. The lender would pay your closing costs. If you may only be in this home for a short period of time, or you're purchasing it for investment purposes, look to see if there's a slightly higher interest rate that, over the next 5 years, I might pay $2,000 more in interest, but I've saved myself $5,000 in closing cost. Keep an open mind to it.
Absolutely. So along those lines, with interest rates fluctuating so much, I'm sure you've seen people that have purchased a home a year ago, right? They purchased it at 4.5% or 4.25%, and they see that interest rate drop. Is there a rate where you tell people, hey, if you drop a full percentage, this makes sense, but it is just, with all the fees and everything that are rolled back into your loan, if I go from 4.5 to 4.25, does that really make sense, especially if I'm going to be in the home only another year or two?
No, a lot of times it doesn't. And you know, I think a true sign of any good salesperson in anything is sometimes when they tell you no. I think I told you that I wanted to buy some new irons for my very poor golf game. Okay. And the practice swings I was taking were so bad that the commission-only golf club salesman told me these aren't going to do you any good. And I appreciated his honesty to the point where whenever I need anything golf-related for the rest of my life, I know where I'm going. I appreciate his honesty. So on a daily basis, I tell people that it does not make sense to refi. If you have a small loan balance, you're saving 0.5 percentage point, it just doesn't. Right. But there's also simple math and some calculations we can do together to let you know when it does make sense. And they've dropped so dramatically in the last, I mean, they're again, with the 30-year fix being around or fractionally below 3%, there's so many people out there sitting 4% or higher that it makes a ton of difference.
Yeah, you're right. Good salespeople do that.